Well, farmers, they are navigating tighter margins and market uncertainty. High fertilizer prices, as we just mentioned, all having ripple effects across the ag supply chain, including the farmland market. Accredited farm manager Chad Hertz joins us now to review the latest trends that he's seeing. Chad, a pleasure to have you. Thank you so much for joining us. Let's start by talking about how the Midwest farmland market is. How are our values holding right now?
I would say that we call it stubbornly steady. It's a choppy market. You're going to find some areas where things might look up. When you looked at the Federal Reserve numbers, the surveys indicate some increases. Illinois came out with some numbers that say it's decreased. So it's mostly sideways to choppy. And the big thing holding it up is that the land is currently held in tight hands. That's not highly leveraged. And at this point, there's not a lot of reasons to sell unless there is a change in status like a death in the family.
Well, I feel like you kind of just tackled this, but in your recent Hertz Outlook, I think your team had described the Midwest farm economy as quote unquote uncomfortable, but not painful. So let's talk about the pressures and where they're showing up. Inputs, equipment decisions, rent. Tell us what you're hearing.
Well, last year, the conversations we're looking at what's coming, but the decision has been to kind of hold steady. And we're looking at 2027 crop year as kind of the tipping point. The pressures are definitely coming from high nitrogen costs, higher interest rates when we're having to rely more on operating money as our working capital is decreasing. Other pressure gets to be the high cost of repairs and maintaining equipment. And many farmers avoid paying taxes with their equipment purchases. And as that kind of gets them caught with working capital squeeze, they're starting to see that pressure. We have had a rally in the last couple of days for the corn and soybean markets, and we're all kind of watching now the Trump visit to China. It's been more political trades with some ideas of what could happen. Excited to hear the news about potentially getting E15 passed. That will bring some support, but it has not been a lot of great news price-wise.
Yeah.
But planting is off to a good start as well, so that I know I'm giving you kind of a balance between the two, but the pressures are definitely higher fertilizer costs, higher equipment costs, and higher energy costs.
Right. I feel like we're always split, right, in what our producers are dealing with and what we're hearing as far as policy, right? All of that coming together and causing, unfortunately, the perfect storm. We often talk about farmers retiring, and I wanted to ask you this. For farmers who are nearing retirement and looking at renting out maybe their land, maybe you can direct them to some key lease decisions that matter most right now just to protect their income and also their relationship with the tenants.
Yeah, the first thing that you don't just retire, you need a plan. A lot of things are going to come down to, do you need to feather out your tax that could happen because you could have depreciating recapture and other things. So your first question is, am I going to participate, or am I going to have a passive lease with cash rent? Once you kind of determine that, then it's about who you're going to partner with. What's your relationship with them? What are their philosophies versus yours? How do you want your land taken care of? How do you want the timing of those payments, and how much risk do you want to share with them? And it's going to be really important to have a tight relationship with the farmers because they are under some pressure, and that shows up in different ways in terms of ability to pay and how stringent you're going to be with a fixed cash rent.
I wanted to ask you this, Chad. Are you seeing any more influence in the Midwest from things like solar and wind development? Is that changing the values of this land?
I think it changes expectations, and we definitely have seen more investor and institutional interest in land, more particularly outside of the state of Iowa where I'm located. Do I think that's a big market mover? I think that when we get soft in some areas and maybe in a local market, there are people willing to step in and buy it, but predominantly we're still above 65, just shy of 70% of farmers buying the land. Some that get into some exchange money. We're seeing developers slow down a little bit with the higher interest costs, but there's a lot of discussion about data centers, and obviously that puts a lot of money out, and they'll start looking for land in areas to replace that. So there are outside investors, but still predominantly it's farmers that have been well-heeled, that are in a decent capital position, even though they're not currently earning. They're more opportunistic and thinking generationally.
All right. Great information, Chad. Thank you so much for joining us. Looking forward to getting you back here soon. Chad Hertz with the American Society of Farm Managers and Rural Appraisers.